But from that bear market, that bottom of the bear market, once we hit the bottom, it will go up. So the rising, if you will, is not starting at the halving or after the halving. It will start when the bottom of the bear market is reached. And that could be today or next month or maybe 3 months from now, but it will come. That's what I think. Well, one more thing, halving cycle. This halving cycle, of course, is not over. So we're 2 years in, a little bit more, I guess, 2.5 years in. But we have still 1.5 years to go. So a lot can happen in that 1.5 years.
Former institutional investor and popular Bitcoin analyst PlanB became a Twitter sensation in 2021 when 3 of his price predictions for the world's largest cryptocurrency hit the mark almost squarely. In June 2021, the popular anonymous analyst tweeted that his worst-case scenario for Bitcoin would be $47,000 in August, $43,000 in September, $63,000 in October, $98,000 in November, and $135,000 in December. The first 3 predictions were quickly realized, and many believed that the world's leading crypto asset was roaring towards $100,000. According to the pseudonymous analyst, he gained more than 800,000 Twitter followers in 2 months as many investors believed his model was foolproof. But that sentiment was greatly tested in November and December 2021. After hitting a record high of $69,000 in early November, Bitcoin prices began to tumble, dropping to $50,000 in December and the low 40s by January 2022. But the failure of the floor model has not stopped PlanB from doing what he loves best. He has since invalidated the model and now mainly uses his stock-to-flow model, which assesses the asset's stock and flow to make price predictions. In a recent interview with Benjamin Cowen, PlanB briefly explains what went wrong with his past predictions and, most importantly, his Bitcoin outlook as we face 2 very crucial years in the crypto industry's development. PlanB has been staying low all year, so this is a rare interview you do not want to miss. Please hit the like button, subscribe, and drop your comments and observations in the comments section below. Everything helps with the YouTube algorithm so the video can reach more crypto lovers. Thanks, and enjoy the video. The former institutional investor begins by discussing his previous Bitcoin predictions and his famous stock-to-flow model.
Last cycle, or at least since I published the article in March 2019, has been a hell of a ride for me. I never, ever imagined the impact and the effect that would have on Twitter, on Bitcoin, on me personally as well. So just publishing that stock to flow thing and seeing it unfold, including all the discussions, was a big fun until the 2021 when everything went up as predicted or expected, I should say. So at least we have that. It's not that nothing happened after the halving, but one thing is for sure, and let me repeat that. I mean, we did not reach the $100,000 that I thought we would have as an average, mind you, right? As an average, and we would go way beyond that. So that did not happen, which is too bad. However, it's not that the world was boring last couple of years. Man, what happened was COVID first and all the aftermath after COVID. Then the China mining ban in, what was it, May, June, somewhere 2021. That put an end to the 100,000 hopes already. The market tried a second time to reach that 100,000. And of course, we had this war in the Ukraine and inflation picking up and all the rate hikes and quantitative tapering instead of easing. So the entire world sort of did an 180. In fact, there were 3 stock to flow models. So the first one that was published in March 2019 had an average price of $55,000. That was the most accurate with hindsight.
Right.
So the original was the most accurate. But when the price started to move up in 2020 after the halving, with the new data, I recalibrated that model on yearly data. So not on monthly data like I normally do, but on yearly data only. And also yearly data from before the halving to get a real out of sample test, if you will, and prediction. That yearly model, that had an average of 100,000. And well, since the price went up and up, we sort of went with 100,000. I guess hope was also part of it. With hindsight, the 55,000 model was more correct. And of course, there was the third model, which is the stock-to-flow cross-asset model. That was more like a fundamental model, not based on historical prices of Bitcoin and stock-to-flow ratios, but based on the stock-to-flow ratios and the market caps of gold, silver, real estate, and other assets. That's why we call it the cross-asset model. And that was the sort of holy grail. Can we predict the price of Bitcoin without or with very little historical data, only based on other assets that also are scarce, like Bitcoin? So that had a very fundamental value, but also very, very rough and very wrong. At least the price is very way off. The stock-to-flow cross-asset model had a price of $288,000. So there you have the 55 of the original, the 100,000, later updated on yearly data, and the 288 based on other asset data.
The gloomy macro environment has been tough on Bitcoin and other cryptocurrencies all year. Add in 2 great liquidation events, and it's no surprise why prices are so low. Despite a recent recovery, Bitcoin is trading at $16,552 due to the FTX collapse. But things are looking up at the macro end. Last month, the U.S. Consumer Price Index dropped 7.7% year over year, much lower than experts had predicted. In his interview, PlanB explains that the 2024 Bitcoin halving is also going to impact the asset's prices greatly. Plus, we are not even through this halving cycle and can't rule out the possibility of massive upside moves in the approximately 18 months left. Here's another enlightening clip from the interview.
Only thing that I added to that model, in my opinion, is that I saw there seems to be some 4-year cycle in it. The main rise in the Bitcoin price is always 1 year after the halving. So you see the white line of the stock-to-flow model jump in 2012, 2016, and the halving of 2020. And in every three years right after it, the Bitcoin price rises. And what's quite interesting is that while there was not a halving in 2011, not a formal halving, the stock-to-flow ratio in 2011 did double. It was sort of an unofficial halving there. That's in fact the only thing that caught my eye at the time, and I added it in the model, and it sort of, like you see in the chart, it sort of says the same thing. Bitcoin goes up and to the right, and the only thing that it adds is that the real rising is after the halving. So coming back to your question, yes, I think the next halving will again be a very important milestone for Bitcoin, because the miners will see their revenues halve, and they have to be compensated somehow to keep their operations running. They know it's coming, so they'll plan for it. And I can predict that there will be a lot of people again, like last halvings, that will say, okay, there will be a minor capitulation and a death spiral, and Bitcoin will go to zero, and it's all over. In fact, they're saying that now for other reasons, but that will continue. And we heard that last 3 halvings, the death spiral narrative and the minor capitulation narrative. I think we'll hear it again, and I think it's a very fundamental and structural moment for Bitcoin again. So it either makes it or breaks it. Of course, I think we'll make it. Yeah, if you go one step deeper, you see that this low, so the bottom of the bear market, is also about a year, 1.5 years after the all-time highs. And that's also true today. It was true in 2019, in 2015. It's also true today in 2022. But from that bear market, that bottom of the bear market, once we hit the bottom, it will go up. So the rising, if you will, is not starting at the halving or after the halving. It will start when the bottom of the bear market is reached. And that could be today or next month or maybe 3 months from now, but it will come. That's what I think. One more thing, halving cycle. This halving cycle, of course, is not over. So we're 2 years in, a little bit more, I guess, 2.5 years in. But we have still 1.5 years to go. So a lot can happen in that 1.5 years. And I know it doesn't look very well right now with the FTX thing and all the fallout of the partners, investors in FTX. but we have 1.5 years to go. So once the quantitative easing starts going, or the war in Russia, in Ukraine is over, or whatever trigger there will be, we could easily reach that area in this chart, let's say 2024, where the logarithmic regression and the stock flow model are crossing, which is in the $100,000 area. Yeah, I would not be surprised.
PlanB is convinced that the next halving event will cause massive price gains. He has said as much in several tweets. He also recently conducted a Twitter poll asking his 1.8 million followers if they thought the next halving is priced in or if Bitcoin will pump after the halving. As of press time, over 20,000 people have voted, with 75.3% voting for a pump after the halving event. What do you think about PlanB's interview and outlook for the world's largest cryptocurrency? Please let us know what you think in the comments section below. Also, ensure you hit the like button, subscribe to the channel to help us reach our goal of 200,000 subscribers by year end, and check out our other crypto-related videos. Thanks for watching.